Well, hello, everyone. I'm T.C. Chambers, Executive Vice President, Affinity with myEcon, and I will be your presenter for this myEcon overview. First, the name myEcon. It is short for the word my economy. We named it that because we want the masses throughout the United States to start focusing on their economy, the finances in their household. See, you are the CEOs of your finances, of your economy, and you have all the control over its success or failure. As such, we want you to shift people's mindset and focus from the U.S. economy, the UK economy, what's going on in Russia, what's going on in your state or your municipality. You can't control those economies, but yours, you absolutely can. We're the personal financial success company because that's what we do. We give people the tools, the knowledge, the encouragement, the empowerment, the support to improve their personal finances. Now, let's talk a little bit about the company itself, myEcon. myEcon is a 13-year-old, debt-free, technology-driven company headquartered in Atlanta, Georgia. And for the past several years, we've helped our associates increase their take-home cash flow in excess of over $400 million. And that's super important because many times you hear companies boast and brag about their economics. We made $1.2 billion or $2 billion last year. And that's fine and dandy and impressive, but you can't eat off that money. That money can't pay your mortgage, put your children in the daycare, put your children through college. So we focus on the cash flow that our system has helped our associates realize. Now, let's talk a little more about personal financial success. Personal financial success is simple. It's, one, having enough cash flow to support one's lifestyle during their working years as well as during their retirement years. But what's important to realize is that the income source for both of those periods are uniquely different. See, for our working years, the income typically comes from the labor that we put forth on our jobs or our businesses or a combination of both. However, during our retirement years, the income has to come from assets that we've built, stocks, bonds, real estate, annuities, residual-based businesses, all those things that we have to build that's going to give us income when we're no longer working. Now, to give you an example of that would be if someone's making $100,000 now and wanted that same $100,000 to be coming in during their retirement years, then it would be necessary for them to build an asset that would then pay them that $100,000 a year without working. Well, since most people's strategy to get to retirement stems around them from working on their job and then investing in their retirement accounts, then that means they would need to have a little over $1.25 million in that investment account. Ultimately paying them 8% annual return, that would pay them $100,000 a year. So in order for one to accomplish both, making enough income during their working years to be able to take care of their families, they then simultaneously would have to be investing enough in their retirement accounts such that after a set period of time, which they determine, they then would have $1.25 million in that account and just yield them 8%, and then they're done. Well, unfortunately, most people don't know all the details that it took to get that done. We are given the strategy to go to school, get a good education. You can never stop learning. Use that education to get a job while you're working, put some money away in your retirement account, and then down the road, you'll be okay. The problem is down the road is not a destination. See, if $100,000 a year is your goal, $1.25 million is that destination. Then you have to learn a little bit about finance and money so you know how much you need to be able to invest periodically, month after month, over a 10, 20, 30, 40-year per period in order to get that $1.25 million. See, once you understand that, then at the 5-year mark, you can check to see if you're on track. The 10-year mark, you can check to see if you're on track. 15, 20-year mark, the same. So we empower people with the tools and the knowledge they need to get that done. In addition to that, we also enlighten them on the fact that there are multiple strategies that you can use to accomplish personal financial success. Now, one of the things we also like to relay to the masses and have them think about is this. It's almost like the tale of two countries or two coins here in America. See, America doesn't have a money or wealth problem. America's the wealthiest country in the world. It represents about 25% of all the world's wealth. It's the home of hundreds of billionaires. and millions of millionaires. So America itself doesn't have a financial success problem. However, personally, there is a financial success problem. See, why do we say that? 80% of Americans feel that they are falling behind financially, even though they can't quite put a finger on why it is. 69% of the workforce have less than $1,000 in savings. Corporate America, wages are stagnant at best, and of course the government doesn't have a solution for the two problems above. What is the solution? First of all, what's causing so many people to feel that they're falling behind financially? What's causing so many people to have less than $1,000 in savings in the wealthiest country in the world? Is corporate America falling short? Or are the expectations of corporate America and the government far off when it comes to capitalism? Let's explore that a little further. See, here are some of the obstacles that are keeping the masses from reaching their financial goals. One, inflation. See, inflation grows at approximately 3 to 4% annually. But what most people don't realize and how they have to take that consideration in their financial strategy is this. Most people's income on their job aren't growing at 3 to 4% annually. Even that, they still don't realize the problem. See, cash flow is a significant ingredient to one reaching their financial goals. So let's take an individual, let's say he's making $50,000 a year in their job. So in 2017, they was making $50,000 a year. Well, now in 2018, they're still making $50,000 a year, but the challenge is with respect to cash flow is that they're paying more in 2018 for their gasoline. They're paying more in 2018 for their groceries, for child care. See, inflation grew by 3 to 4%, but their wages did not. So that means they're using more of that $50,000 for the cost of living for inflation. So that's less of their dollars they have to grow their retirement account to get to that $1.25 million. Or if someone's making $50,000 a year and they want $50,000, they're going to need about $625,000 a year. So either way, inflation is sucking up their cash flow and making less available to be able to put into their retirement accounts. Now, the second obstacle are high taxes. Now, why is that such a big obstacle and such a problem? Well, because if someone just got a contract with an employer that they'd be making $50,000 a year, then what happens, they start basing their lifestyle, start spending that whole $50,000 a year. So what car they drive is based on the gross, $50,000 a year. What part of the city they live in is going to be based on that gross, $50,000 a year. The type of happy hours, the type of cell phones they have. All those things is based on that gross $50,000 a year. Well, taxes take about a third of most people's income. So they're really not living off the gross. They're living off of the net, which is about $35,000, which is $15,000 short of what they're basing their lifestyle off and what they're spending. So that extra $15,000 has to come from somewhere in order for them to maintain their lifestyle. So instead of downsizing or cutting back their lifestyle, it creates a third obstacle known as debt. See, now they're financing that other $15,000 of lifestyle that they do not have in that paycheck. So now the interest to service that debt is taking up more of their cash flow. So quickly recap. You have inflation taking up more of their $50,000 that's not now going into their retirement account. A third of their income, almost $15,000, is taken up by taxes. So that's more cash flow that's not going towards their investing towards retirement. Then because of that difference, it creates debt. The cash flow required to service that debt, to pay for that interest, are again now less dollars that they have to use to invest to go into their retirement accounts to reach that $1.25 million or that $625,000. Which means the fourth obstacle is their inadequate investing in savings throughout the masses of the working force. That's why so many feel like they're falling behind financially. That's why over 69% have less than $1,000 in savings. And that is why only 4% of the working force ever reach that second objective of having enough cash flow coming in during the retirement years without anyone in the household having to work. Now, In order to attain personal financial success or financial success, one needs more cash flow, but more cash flow alone isn't enough. Here's why. See, we all know of entertainers or athletes that had millions and millions of dollars of cash flow. And then we sadly heard stories that down the road they're broke. So cash flow alone isn't enough. You also have to couple better financial strategies with that. So our system, is designed to increase one's cash flow and then give them strategies of how to use that cash flow to build assets that will then take care of them during their retirement years whenever they decide that point in their life is. So our income shifting membership is designed to increase one's cash flow, our associates' cash flow, 5 different ways. In addition to the membership, we show how building and earning business income is essential, especially in a capitalist society like America. So let's talk a little bit about those 5 cash flow streams. The first cash flow stream is correcting tax withholdings. The second is our smart credit system. The third cash flow stream is centered around minimizing taxes via our cash flow manager software. The third is eliminating debt via our debt elimination software. And last but not least, investment education. So let's take a look at these cash flow streams individually. First, correcting tax withholdings. Now, we're nowhere on the right track. See, you know your business is in the right industry where you have over 100 million people that make up that market, over 100 million potential clients or customers. Why 100 million? Because the IRS says 80% of the workforce, 80% of employees, which is 100 million people, have too much money withheld from their paycheck for taxes. So that's 100 million people that we have to help, put more cash flow back into our households. Now, why is this so important? See, when those employees have too much money withheld from each paycheck for taxes, it generates what's known as a tax refund the following year when they file their taxes. Now, the problem with that is they lose money. See, let's say an individual or family got $3,600, $3,600 tax refund the following year when they filed their taxes. That means that was an extra $300 a month that was withheld from their paycheck. Now, that person, that employee lost money because that $300 a month sat down at the IRS for over a year and then was returned to them with no interest. Now, the IRS used that money to grow and to make interest. So your money made interest, but it didn't go to you. So you lost the earnings on that income by letting it sit there at the IRS. Here's another way you lost money. Because you didn't have that $300 in your paycheck, you didn't have it to put into your retirement account, which, 1, lowered your taxable income by that $300, and 2, was able to gain interest, compound interest month after month while you're investing it. So you lost those valuable tax dollars to help you get to that $625,000 in your portfolio, $1.25 million in your portfolio. And lastly, consider this. It's Thanksgiving time. It's November. You're going to the grocery store. You fill your grocery cart up for Thanksgiving dinner. It comes to $200, $250, $275. Now, had your W-4 been adjusted properly and you had that $300 in your paycheck, you could have used cash to pay for that grocery cart full of groceries. But like millions, use their credit card to do it. So now, here we are in 2018, July of 2018, and that credit card still had not been zeroed out. So that means the dollars that were spent on the cranberry sauce, on the stuffing, on the turkey, on the ham, you're still paying for it. The transaction's not done. Still paying for the cranberry sauce. If you used your credit card to watch Black Panther in February where it came out, and you haven't zeroed out that balance, guess what? You're still paying for those tickets. That was a very expensive movie outing that you're, still paying for. See, so you lose money because you end up paying interest on expenses that you could have paid off cash if you had those dollars in your pocket. Bottom line is millions of Americans are not reaching their retirement goals because they aren't using their dollars, their hard-earned dollars, to work for them to get there. So not only is the IRS, but myEcon is much better to maximize your take-home pay and use those dollars for investing, debt elimination, or even lifestyle. Typically, this cash flow stream is the easy one. If you're a W-2 employee, we can utilize this cash flow stream to put additional $200 to $500 back into your paycheck on your jobs, money you're already working for. You don't have to get overtime to get that money. You don't have to get a second job to get that money. You're already working for it. We just have to teach you how to use the documents properly to capture those dollars. Let's move on to the second cash flow stream. The second cash flow stream is centered around credit, in particular our smart credit education system. See, our smart credit education system is focused on educating on the importance of credit and how credit works. See, we use the concept, you hear people all the time say, it's better to teach a man how to fish than to give them fish. So we feel it's much better to teach an individual how credit works, give them the tools and everything they need to repair their own credit. So our smart credit system consists of 26 videos that take you step by step through the credit process. How credit works, how to read a credit report, how to pull the credit report, how to identify derogatory information, understanding that that payment history represents about 30% of your credit score. And then we give you the other information, how that you personally can affect the other 65% of your credit score. So bottom line, our system empowers you to repair your credit, to build your credit, to maintain good credit. Now, unfortunately, because of lack of financial literacy, which we help people build on that financial literacy, give them financial knowledge, most people misunderstand the importance of building their credit. Most people think building their credit is important so they now can go out and buy a car. Well, that's another liability. See, we focus on help people get debt-free, build their credit, so now they can leverage that good credit to use someone else's money at a low interest rate. So in other words, we want to show someone how to build their credit. So now let's say for the home they're going to live in, instead of getting a 6.5 interest rate for that home that you're going to live in, what if you took 6 months, a year to build your credit so now you get a 4.5 interest rate for that 30-year mortgage? Let's look at the difference. See, let's say someone was getting a $250,000 mortgage and their credit was okay. Well, with that okay credit, they were able to get a 6.5% interest rate for that 30-year mortgage. Now, for that $250,000 mortgage, that mortgage would be about just under $1,600 a month. However, if they used our system, understood how credit worked, repaired it if it was necessary, built it a little more, now maintained it, 6 months, 12 months later, now they go and apply for a $250,000 30-year mortgage, and they get a 4.5% interest rate. Now that mortgage is just under $1,300. So by learning how credit works, repairing and building and maintaining their own credit, they now shifted $300 that they would have spent on a mortgage into positive cash flow. Now, suppose while they have this 30-year mortgage, they invested that $300 a month for the entire 30 years. If they invested that $300 a month, say at 6%, at the end of the 30 years, they have a mortgage that's paid off and a little over $300,000 in an investment account. Suppose they was getting 8% on that $300 a month they was investing. Well, at the end of that 30 years, they'd have a paid-off mortgage, a paid-off house, and a little over $477,000 in that. So credit and building your credit is, again, about cash flow. See, that difference in saving between getting a 6.5% mortgage or a 4.5% mortgage, that cash flow now can be used to build an asset. That building that credit now can be used to get you a lower interest rate on an investment property. So again, correcting tax withholdings and building your credit can become another cash flow. So that's our second cash flow stream via our smart credit system. Now let's take a look at our third cash flow stream. That's associated with minimizing taxes via our cash flow manager software. See, the IRS says business owners have access to deductions that employees don't. In fact, business owners, even home-based business owners, have access to over 470 more deductions that employees do not. However, if the employees had a home-based business, which we provide, they now can convert expenses that they already have, lifestyle expenses, into tax-deductible business expenses. See, the IRS has two requirements. That one, you're a business owner, and you operate your business with a profit intent. So our system is designed to help people start a business with a profit intent because they need that cash flow to go into their retirement accounts to help them build their assets. So now if you have a business, we show you how to use your vehicle in conjunction with building your business, and now you can either use the standard mileage rate of almost 55 cents a mile or take out the actual expenses of your vehicle, depreciation, gasoline, tolls, oil, lease payments, parking, those expenses you already incur. What about communications? See, if you're an employee, you don't have a business, you're already paying for a cell phone. You're already paying for internet access. But as a business owner, you now can make those expenses partially tax deductible because inevitably you're going to text someone. You're going to call someone and ask them to look at some information about your business. Check out your website, some of the products and services that you provide. You're going to email some folks information about your business. You're going to be at home researching different aspects of what you do. Now those same communication expenses can be partially tax deductible. What about travel? Summer's almost over here in another month and a half or so, and people have been traveling throughout the whole summer. See, if you went to Atlanta and you visited some family or traveled to Chicago or Vegas or did a trip out in California or Disney World in Orlando, you incurred some travel expenses. If you had a home-based business with us, many of those expenses would have been business deductions because we would have encouraged you. We would have shown you how to talk to a cousin or two before you got to Atlanta or some friends before you got to Chicago, or set up a workshop in a Starbucks or a Panera Bread while you're going to Orlando, and showing you how to make those expenses partially and some even 100% tax deductible. What about if you're a parent? And as a parent, you know you take care of your children. You buy them food, clothes, recreation, karate classes, piano lessons, football, all those things that it takes to raise your children. Those are expenses that are already occurring that are not tax deductible. But once you've set up a home-based business with us, we show you using the IRS publications that how you now can pay your children wages for helping you in your business. And IRS says, as a parent, those wages now become tax deductible. You can pay them up to $12,000 a year because the standard deduction for someone single in America is $12,000. So children working for their parents up to the age or under the age of 18 can earn up to $12,000. If the business is a home-based business, a sole proprietorship, or even a partnership, then there's no payroll taxes due. That's Social Security and Medicare taxes. So we show you how to do that. Now, we have a cash flow manager software that's a very important step of this, very important step to this process. Because even though you have a business, and there are many business owners out there now, but because growing up, we weren't taught tax record keeping. We weren't taught how to document these expenses, how to stay in compliance with the IRS so we have bulletproof records. See, the second requirement is that you keep good records because businesses keep good records. So if you're operating your business with a profit intent and you're keeping good records, you qualify for these deductions. So our cash flow manager software is a software used on your smartphone, your tablet, your computer, and it helps you keep track of your expenses by category as you go, documenting the who, what, when, where, why, and how much, and capturing a digital image of the receipt. This now results in getting you more deductions. See, the difference between two people, one both making $50,000 a year and one paying $20,000 of taxes on that $50,000 and one maybe paying $3,000 of taxes on that $50,000 of income, is not how much they make, but the amount of deductions that they get. So setting up a home-based business with us And operating your business for profit intent, keeping good records, is going to give you the ability to increase your deductions, thus lowering your taxable income. See, let me give you an example. You have a W-2 employee that works throughout the year, and their W-2 at the end of the year showed that they paid $6,000 in federal income taxes, for example. They filed their taxes, and they got a $3,000 refund. Well, that means you only got back 3 of the 6 that you paid. So now, by minimizing your taxes, by increasing your deductions, we allow you to go back and get the other $3,000. Now, using the first cash flow stream, as a business owner, properly documenting that W-4, 2 of the worksheets, now we give you the ability to get that second $3,000 up front. Thus, the first 3 cash flow streams can typically increase someone's take-home pay on their jobs $200 to $800. So our first 3 cash flow streams are designed to do that. Now, let's take a look at the 4th cash flow stream, and that's debt elimination. So we have a debt elimination software, and if you combine that with the additional cash flow that we've generated through our first 3 cash flow streams and possibly some business income, in this example, we used an extra $1,000 a month to apply to the current debt that we had. So apply it to about $300,000 of debt. That would include a car loan. That would include some credit card debt. That would include a mortgage. Applying that extra $1,000, debt by debt by debt, that would give us the ability to eliminate over $300,000 of debt in less than 100 months versus 360 months or 30 years. See, by doing so, we're going to save over $300,000 in interest payments. By doing so, we're then going to free up over $2,400 of cash monthly that was being used to service that debt. So we now shifted $1,000 of cash flow into aggressively eliminating debt, utilizing our debt elimination software, the step-by-step, debt-by-debt, eliminating that. Now that freed up cash. See, debt elimination becomes a cash flow stream because, think about it, if you have a $250 car note, once you pay your car note, especially if you pay your car note faster, that frees up $250, which basically gives you $250 of more cash flow to aggressively go into now investing, taking cash and put into an asset that brings you more cash. Now, that brings us to our 5th and final cash flow stream, and that's investment education. See, investment education is important because once you begin to understand how money works, once you begin to understand the difference between a cash equivalent, a stock, a bond, real estate, a real asset, once you begin to understand compound interest, dollar cost averaging, see, once you begin to understand all those things, you're now equipped, you're now empowered to make informed investing decisions. So our system is designed to teach terminology, to teach concept, to teach strategy. So now you're fully equipped to make smart and sound investment decisions. And you see, once you understand that and you are, in fact, a business owner, now you have the ability to discern whether, okay, if I have $1,000 and I invest in the stock market, a good interest rate can be anticipated to be X. But as a business owner, if I invest that $1,000 in myself, in my business, what can I generate as a rate of return? See, 1, if you don't have a business, that doesn't even become a part of the picture of your investment strategy. 2, if you don't improve your investment knowledge, your financial literacy, you won't even be able to make sound strategic decisions and comparisons like that. So investment education is extremely important because it has a major impact on your ability to turn your cash into assets that bring more cash. So our core business is a system put together in the form of a membership that focuses on financial literacy and entrepreneurship. This membership or system is delivered via a home-based business. So that's our core business, marketing this system to empower people to improve their cash flow and to generate business income. Now, like many other businesses out there, we don't put all our eggs in one basket. What we do is we give ourselves the ability to generate multiple income streams. So in addition to our core business, every associate is given a website, and all the company's products are listed on that associate's website. So now a potential client can now go to our website and come to us first and foremost for our membership, for that system that's going to empower them to generate more cash flow into their households. Now, it also gives the ability to say, okay, if they're not interested in the system and they just would like our smart credit repair system, then they can go directly to the associate's website and purchase that product only and gain benefit off of it. And it doesn't require the associate to be focused solely on that product. They can focus on our core business, our flagship business, of empowering people to improve their personal finances while creating another income stream in the credit repair industry. Now, they can pay for that system one time, $99, and that gives them 26 videos that show them step-by-step how credit works. It empowers them to now be able to repair, build, and maintain their own credit. And more importantly, they can now teach their children. They can be proactive. They can develop good and positive credit habits early on. Identity theft. Identity theft is a billion-dollar industry. So a client can go to our site and purchase directly from our site identity theft. $7.99 for identity theft, much less than what's there on the market, and it provides $1 million service policy in case your ID is compromised. Cash flow management software. See, there are businesses out there that have been operating for 1, 2, 3 years, and they haven't been using a sound tax record-keeping system. You know, end of the year, they find themselves with a shoebox full of receipts, whether insurance agents, realtors, or small businesses. So they can purchase this cash flow management software for $10.95 a month from our associates, and now they have a system that can use from their smartphone, their tablet, their computer, that can keep track of all their expenses by category. In fact, can keep track of multiple businesses for them, the income and the expenses. What about travel? People are traveling all this summer. They've gone online and booked their travel. Well, now they can go to our associates' website, click on Book Travel, and we have contract with most of the major carriers all over the country. So now they can book discount travel through an associate, through a friend or family member's website. Or if they're associates themselves, they can book their travel through their own website, get Priceline, Expedia's, discount pricing, and get commission on it. RotorShore. RotorShore is like a AAA type of product, so now they can buy from themselves at $7.99 a month. So it has towing. You need gasoline, it brings some gas. All those things that most road assist or roadside assistant programs have, except now you have the ability to not only get it from yourself or have someone be able to go to your site to be able to buy that. And it doesn't have to have you involved in that process. Again, generating another income stream from this same website. The last one, but not all of our products, is our Cashback Mall. See, someone can go to your mall, go to your site and purchase one of those malls for $12.95. Now they have a mall which they can go to and shop from over 1,000 stores and get cash back. Walmart, Macy's, Best Buy, BrandsMart, Home Depot, Staples, 1,000 businesses, over 1 million products, and then get cash back off those products. Now, for the associate is going to get commission off any of those products that person can buy. See, we all know people that say maybe go to Walmart once a month, every 60 days to buy their toiletries or service products that they need on a regular basis. Well, now they can go to the associate's website to get that, and they'll get cash back, and the associate get commission. But if they get their own website, they can go to their own website and get the cash back, and associates still get commission on it. Bottom line is, you have to build and operate your business as a CEO. And you have to think like a Jeff Bezos. You have to think like a Walmart Corporation. See, Walmart Corporation focuses on distribution. So we want you to do the same. We want you to focus on distribution and to have multiple products and services offered to the general public. Now, every associate, when they get this membership, they're provided our world-class business system, which comes with a world-class compensation plan. See, every time we offer someone a membership, we now empower them to improve on their personal finances. Once you have helped 2 people you have sold 2 memberships to just 2 people and empowered them to do that, you're promoted to our first leadership position, which is known as Executive Vice President. You immediately give yourself a pay raise. Why? Because you went from getting 15% of all the commissionable sales on your website to now 100%. So now when someone goes to your website and purchases from any of those product categories, each product has a commissionable sales volume. So let's say the RotaSys, $7.99. $2 of it is commissionable sales. You now get 100% of that, which is $2. So you get $2 a month of every customer that utilizes that awesome product. Now, in addition to that, you also get up to 85% of team sales. Now, you never have to build a team at all. You can get this membership, utilize these cash flow streams to increase your take-home pay. Put money aggressively in your retirement account to help it grow. Use that extra cash flow to eliminate debt rapidly, saving on interest. Use that extra cash flow to enhance you and your family's lifestyle. So you never have to do that. But remember, we want you to operate like a CEO in the same mindset of Walmart. See, Walmart doesn't spend its time trying to operate out of one location, out of one franchise. No, Walmart focuses on distribution. Waffle House focuses on distribution. See, Waffle House doesn't have one franchise. Waffle House has thousands of franchises. Because they focused on distribution as a corporate strategy, they now sell more steaks than any other company in America. See, that probably wouldn't be your first choice to refer someone to go get a steak, but they move more steaks through their distribution network than anyone else. McDonald's doesn't have the best burger. I think mine is much better, but McDonald's sells billions of burgers because they have distribution. So we want to help all of our associates use those same successful building principles. So now, as you do that, you're rewarded for doing that. Every time as an executive director, you personally market one of our memberships, you are given a $35 commission. So you get a $35 referral fee every time you market one of our memberships. Now, as someone on your team in your base shop does the same, you earn up to $25 every time someone does that. So you help your buddy Jeff get a membership so they can increase their take-home pay. See, they're not getting the membership so they help you sell stuff. They're getting a membership so they get the knowledge and tools they need to empower them to improve their personal finances. Now, Jeff saw the value and immediately told his twin brother. As Jeff's twin brother got a membership, our system paid you a $25 referral fee. Jeff's twin brother tells his girlfriend. His girlfriend gets a membership. Our system pays you a $25 referral fee. That process happens through infinity. That process happens through every individual you personally sponsor down through infinity. So not only do you have the ability to earn weekly income of products and services that are purchased from your website, but you have the ability to earn weekly income as your organization, as your network is growing. See, Subway has a huge network. That's why they sell so many sandwiches. Waffle House has a huge distribution network. That's why they're number one at steak and eggs sales. So we're going to help you do the same, build that network and compensate you while you're doing it. Also, you can build up that retirement passive income. See, the traditional strategy that people are given to go to school, get a good education, use that education to get a job, and then invest in your retirement account so down the road you'll be able to retire, that's just a strategy to build up a passive income that will then take care of you and your family. Well, we are giving you a strategy to build up that same passive income, but because you're getting help, you get to collapse time. See, the traditional strategy is going to take 20, 30, 40 years because of the amount of cash flow people have. But this strategy, 36 to 60 months, you can build up that 4, 5-figure, 6-figure residual income in order to be able to take care of you and your family, and no adult in the household has to work. See, so imagine in a 6-month period helping 100 people, just 100 people, empower themselves to be able to increase their take-home pay and improve their financial literacy through entrepreneurship. Well, in that 6 months, you would have built yourself a $500 a month residual income. Let's say in the next 6 months, you and your team continue to help empower people. Well, after a year, you'd have 200 people in business for themselves, empowered with our membership. That would be an extra $1,000 a month residual income that you'd have built on a part-time basis. You take that out 36 months. That's $3,000 a month that you would have built up a residual income. Now, inevitably, and actually, once you'd have built a team of about 400 people, it grows exponentially. You now would have over $3,000 a month, $3,500 a month residual income. So bottom line is you have the ability to get help in your residual income. See, Zuckerberg, he became a billionaire so fast because he had 13,000 employees. In other words, he got help building his asset. But we aren't taught in our traditional education system to get help. We're taught to be the only breadwinner, to work hard for every dime we make. Now, that's something to be proud of, but that's not the smartest way to access the $97 trillion of wealth in America. So our world-class compensation system gives you the ability to rapidly, systematically build that residual income you need to take care of you and your family in short order. Again, because you're getting leveraged income, you're getting help. Now, let's finish up. Now, all you need to do is get back with the person that invited you onto this webinar. They're going to invite you to their website. They're going to walk you around their website. Why? Because you're going to get a personalized website just like theirs. You're going to get our world-class business system. You're going to get our income-shifting membership, which is, again, going to help you increase your cash flow by creating 5 new cash flow streams. Of course, in that membership, you're going to get our tax withholding training. You're going to get our smart credit system to help you build, repair, build, and maintain good credit. We're going to show you how to minimize taxes and give you that training via our cash flow manager software. Our debt elimination software to help you rapidly eliminate your debt. Our investment education so you now can become an informed investor. So as you're increasing your cash flow, you now know how to turn that cash into an asset that's going to bring you more cash. And of course, I would be remiss to not talk about those valuable tax benefits. Now, to get this membership, it's a one-time fee of $47.90. And then after 30 days, there's a small licensing fee of $34.95 per month. That's less than $1.20 a day to operate your business. But remember, that $47.90 will then show you how to shift $200 to $800 back into your paycheck. The tax benefits alone pays you more than the $47.90 that it costs to get started. The tax benefits and tax savings alone typically pay our associates more in their take-home pay monthly than the $34.95 it takes to own and operate your business on an ongoing basis. Bottom line, I want you to think of this. Think of the number of years that you've already been working, and you have a very successful career. We're going to assume that, and I'm sure that's the case. If you were to stop working today, right now, the next month, the following month, how much passive income would you have coming in? So if you worked 5 years, 10 years, 20 years, how much passive income, residual income have you built over those years using what I would say that antiquated system? Now, you can't ever stop learning, but using it to get a job and build someone else's assets, having your time, your knowledge, education, and leadership leverage to build someone else's asset, it's not helping you. It's not helping the masses build a legacy for their family. See, I spent 7 years of my life in the hospitality industry. Wonderful time. I was a manager at a resort hotel and on a private exclusive island. Wonderful experience. And I have friends that are still working in that industry. I have friends that are working alongside people that have 20-plus years of successful experience in that industry. And that if they retire today, they would have no residual income coming in. All of their efforts, the job that was well done, went to build equity in the hotels that they're working for. See, if right now the hotels that they're working for sold for $400 million, it was initially worth $100 million, and it grew in $300 million of equity, they would get none of that equity. Their grandbabies would get none of that equity, even though their time, knowledge, expertise, and leadership was utilized to build that equity. So you have to modify. Even on a part-time basis, you have to modify how you make your money. You have to modify and enhance what you know about money. You have to modify how your money works for you. You have to increase the number of people's time, knowledge, expertise is helping you make your money. See, all those individuals will be entrepreneurs just like you. Our system is designed to teach you to do that. So get back with the person that invited you out. Tell them you're ready to get started. If you have some questions, get your questions answered and then get started. See, every day that you're not in business and you have a vehicle, you're losing money. You have a cell phone, you're losing money. You have internet access, you're losing money. You travel, you're losing money. You have children that you take care of, you're losing money. Let's stop that money loss, capture it, and use it to help you reach all of your financial goals. I thank you for taking time out of your evening or your day and watching this webinar. And please get back with us and allow us to help you get your questions answered and get started today. Thank you all, and God bless.